Upstream, are you with me? Under rainbow, curtain in the city, ocean, me down low. Upstream, are you with me? Feeling
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just got a couple of minutes past midday here, making it the same time, or an hour earlier, UTC. Just gone 11 a.m. UTC. How is everybody doing? A big shout out to everybody joining us live today. Had about 12,000 of you live last week across the two shows, which was some of our highest numbers. So really do appreciate you all stopping by, lots of you reaching out on bits and pieces, and just wanted to say a quick thank you for that. So here we are, start of a new week. We're here to decant our thoughts from last week, take a little look and an overview of traditional markets as well. So just rolling out a new microphone at the moment. Can you guys just let me know that you can hear me okay, that you've got the visuals all right? And then we'll look to kick off. You should be seeing a daily chart of Bitcoin here on OKX, and do just let me know in the chat. I know there's a little bit of a delay that comes through in the chat. Sound good, Craigie boy, that's what we like to hear. Quality. All right, well look, I'm really not going to mess about today. We are going to start here on Bitcoin, then we're going to kind of backwards rationalize our thoughts from my Bitcoin report, which went out to members last night. At the Bird Nest, we do a daily Bitcoin report. The different analysts share that amongst ourselves to just give a broader range of market views on where we think the market's heading. And obviously the key driver for that in respect of cryptocurrency is Bitcoin. All right, so we're going to have a look at that. But really, we want to be taking a look today as well at the NASDAQ, at the S&P 500. What's the dollar doing? See, continuing dollar weakness across the market. How's the VIX starting the day off? What are we looking in terms of Monday's range developing? Where are our key levels? So without further ado, we're going to dive into this. We'll cover the news and bits and pieces as we go along. So I'm just going to zoom out a little bit here. Horace, hello, mate. And just really put everything into context, all right? So very, 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 very simply, looking at how price reacts at key levels, in this case, we're looking at highs and lows, just got these on here as some examples, can give us a really good indication of how price is going to follow that movement up. For example, when we took out this high, right, what was significant about this high? First of all, swing higher, it was the lower high in a bearish trend at this point because we had the higher high, lower low, lower high, and it just looked to tease its way down below this. Now, whether you're somebody that would be looking at that to be microstructure, there's no doubt that there was a dynamic shift towards a bearish market structure. Now, typically with these things, you're looking for continuation for a close. We've had a very good liquidity sweep of this level, reacted over here at this bullish gap. And as it stands, that was the catalyst that led to this large expansion. So thinking of the opposite of this, as we saw price run these lows, what did we see? We saw a strong reaction here. Price getting bought back up, bullish engulfing candle, price moved higher. Now, something that we can look at is how price is reacting at the prior candle's highs and lows, treating each one as its own independent range, okay? So, for example, if price sweeps out the liquidity, as we saw here and here even, of the high or low, but closes back in its range, we can expect that price could be looking to attack the liquidity on the opposite side of that range, in this case, a weekly candle. Now, we're going to look at that a little bit more on the hourly. This is something that I learned much more from foreign exchange markets, okay, from traditional market trading, but still very applicable to Bitcoin and all cryptocurrency. And the reason for that is quite simple. It's because this is all just a print of human psychology on a chart. That's what candlesticks really are, right? So on a weekly scale, it's very hard to just not be bullish here, right? I do think that this gap down here on a weekly scale is providing a draw on liquidity. I think ultimately we've seen a rejection here again at the prior all-time higher. Now, as we came up into here, look, we've come off the back of this huge bullish run-up, right? We've then seen a rejection here and we've left this doji type candle. So price has come back underneath this higher, right? It's stepping back within the range. Now, what's quite interesting here is how the weekly candle had a really strong close above this weekly higher. Now, often meaning that we would expect continuation for the higher here to be attacked. Now, the caveat to this is if we're at a key level of support and resistance, and there is zero doubt that we're at a key level of resistance here. I mean, obviously, including this as well. Yes, we deviated this, but look, we're not seeing those large, expansive candle bodies above, and ultimately the key liquidity is resting up here. So sellers in the short term are looking to exert some control. Off the back of that, we've seen a bearish engulfing candle. The nature of this candle's body engulfs the previous bullish candle here. So it's natural to expect a corrective move. Also, whenever you're talking about this much upside. Now, obviously on the news front, which we'll cover in a little bit, we did have the escalation again between Trump and China, which kind of gave a little bit of a shock to the markets last week. These news events having slightly less impact, though, than they did previously because there have just been so many of them. It's not this, but for want of a better term, it's almost a little bit like the boy that cried wolf, right? You can only do it so many times. The impact wanes, the impact wanes. People are now quite expecting of a deal. The markets are incredibly good at pricing these things in. So what we're looking for overall are kind of, either high or low volatility areas, price either to kind of sit down, chill out for a while. We don't have much implied volatility, or we really think that we're going to have a lot of volatility. Now with crypto, obviously it's a little bit of its own animal in this respect as well, because it does love a bit of volatility. But let's decant this down now to the daily. Hey Nit, how are you doing, my friend? So I'm just looking for anything that really slaps me in the face. That's how obvious I want it to be, right? So look, we see this price came up, we closed above this level, things looking really good here. But look, two things jumped straight into my mind. If we were looking at this as a range, we had this expansion, yeah. Now price really within this kind of area here, yes, we've had this consolidation, price came up, deviation, small consolidation, now price is breaking down. So what can we glean from this chart? We want to find consistency through confluence, okay? So we want to decant, what are the charts telling us? What are the candles telling us? What's the market structure telling us, right? And what are the key levels that we're looking for? So when I'm looking for the key things here, I'm looking for them to really, really stand out. Now, this is very, very key for me. For anybody that doesn't know how I trade, you can find a lot of free information on my Twitter. You can find all of my educational material over at the Bird Nest as well, but I share most of this stuff for free as well. I'm always happy if anybody wants to reach out as well for that. So let's put this into context. What was this? This gap here, clear and obvious, right? Until price closed below it here, yeah, that was the week, the 29th of May. Then I'm expecting price to move lower. Why is that? Well, a couple of different reasons. This was the key resting liquidity. Remember what we just discussed about how price interacts with highs and lows, right? If we look at this example again here, if you maybe just joined and didn't see us for the weekly, this key liquidity, why is this key liquidity the same as this is down here? And we'll go on to this in a minute, the equal lows. But this basically creates a range, the high and the low, right? Now, if we want to see a rejection here, the expectation is we see price wick up into this level and then close back in the range, showing us weakness. Two things always pop to my head in this respect. Same here. Is this a deviation? Always think of SC and the magnificent way he says that and trades it. And my dear friend and brother from another mother, Trader Dank, who will tell you a wonderful story about Johnny and the pizza. If you ask him really nicely, you'll go and check him and his crew out over at Dank's Country Club, right? So look, basically what we're saying is if this is real strength here, then we'd look for a retest of the area. We don't mind if it dips back into this area, but you want to see long downside wicks. Why do we want to see long downside wicks? Because the long downside wicks give us an indication that buyers are starting to step into the market. Yeah, we had an equally high wick here, so we wouldn't really look at this one in the same vein. But this is what we're seeing now. In contrast, look at this. The move when it came back and it held, the bodies held this gap. It wouldn't have been purple at this time. It would have been grey like this one, signifying that it's a bullish gap. I do bullish and bearish gaps the same. If you want to, so when you're starting to get your eye into this, if it is a way that you trade or something you have interest in, then you can always do these gaps in green if they're bullish and red if they're bearish, right? Until you really start to see them. So what's significant here? Well, we held this gap, right? Often when we take some form of liquidity, the gaps provide a really good place for the market to rebalance and for buyers to step in. So if the buyers have strength here, then the expectation is quite simply for price to retest this and then for it to go higher. When we move really low into these gaps, right, as long as we hold them, I'm okay with that. At this point, we've rebalanced this area, but it can still tell us a lot. Now, ultimately, the candles are holding this is fine, runs down into the lows. This is very bullish. Why is this very bullish? Let's just clear this up. This is really bullish because we took out this low, right? So swing low because it's got two higher lows next to it. Price came down holding a bullish gap, right? So we expect the price to move to the upside. We actually have an inside day here, making this an inside bar pattern as well, meaning this is our range. I'm not going to cover that in today's show, but if you are interested in that, you can find a post pinned to the top of my Twitter profile. I'll pop it on the screen now, along with a ton of other educational material. So please do pop over there, give me a follow, let me know what material you'd like to see more of. So while we're looking at this, price held here. So why am I bullish here? Well, ultimately, look, long upside wick here shows me that the bulls haven't really got it all their own way here, but we could have ascertained that as well from this candle. Now, remember, these things all need context behind them. They don't just work in singularity, and even, regularly, often when you put things together, it's not going to play out. The key thing is that these things play out over time. Okay, so we have to trade probabilities. That's what we are as traders, right? We're not gamblers. That is what separates the very best gamblers from regular gamblers, is they're basing it on a statistically driven model. So as we've held this gap, this is a very ugly bearish candle, right? But it's held the gap. We closed below this. I would have expected price to start running into these lows, as happened here. Right? However, when price looked like it was going to do it, and this is exactly why it's so important to wait for the close of the candles, all right? So as we look at this here, price holds. What does it do? Looks for all the world, because price opened here, yeah? Comes back down, people start to short this because we've had the rejection at the prior all-time high. We're now back underneath that level. People love to be a little bit doom and gloom. Market, typically the herd overreacts normally at key points. So what we see here is the inducement of shorts, meaning that those shorts get trapped when we attack this low where the liquidity rests, and there's this big bundle of liquidity here allowing major players to step in, get their bids filled and send the market higher. Now, when that happened, we then look at how price reacts at these levels, okay? And what we can see clearly here is this level really capped the market, this higher, yeah? So we saw a very tentative close above this high, the prior day's high when this candle came up. But look what we were just discussing with wicks. Now look how the upside wick is looking a lot larger. Often what we see in these kind of moves is you get expansion, consolidation. The consolidation, often you see these doji candles. And again, something SC used to talk about a lot many years ago when I first got introduced to him trading FX markets. And I think he really kind of packaged this very well, which is small body candles. Consolidation leads to big body candles. That's why we focus so heavily on the bodies. That's where the trading took place. The wicks are where the trading was attempted, and we can see the market swinging both ways, typically taking liquidity from one side, trading to the other. So as we're up here, we failed to displace below this low, market moves up. We displaced marginally above this high, but this is clearly the high here that's capping the market. We get consecutive doji candles, price comes back in the range. What I'm always asking myself in a situation like this is, while this holds, if the buyers were really in here, I'm not sure why we would be coming back to retest this level again on the higher time frames, okay? It doesn't mean that we can't, so we have to stick and follow to our plan. So ultimately, whilst in here, from an intraday perspective, I'm still looking for long trades, all right? But I'm applying a model that means I'm getting in and out of those trades relatively quickly. And we'll see that towards the tail end of the live trading session we did with members last week, when we're looking to execute, take our profit quite quickly and step away, because ultimately the trend is a little bit overextended. It's a little bit overbought. So in here, we want to show a bit of caution. Ultimately, when we break down here our secondary point of confluence. This was on Thursday. By the time Thursday's trading had closed, what did we do? We came in, classic sell day, price drives higher, sells off aggressively, large body candle. Look what it did to that swing low, and look what it did to the prior day's low. Remember what we were discussing over here, yeah? It's a reverse of this move. Price closes above. You don't mind it dipping back in, but ultimately the body is stuck to this line, yeah? We then get that nice expansion candle off the back of a beautiful pin bar candle here, yeah? And then that's it. Engulfing candle, see the long downside wicks, we then expect expansion here. So we're now facing the opposite of that, basically. We've broken down below this level. I do believe, as I wrote in the Bitcoin report last night, on a short-term basis, that the rips are for selling. Now, we still need targets. At the moment, the relatively equal lows down here, which is this low here, and this low here, are providing a beautiful draw on liquidity. Next thing that we can look at is what our order blocks are doing, or whether you treat them as areas of supply and demand. It's completely up to you. I call them order blocks. Quite frankly, absolutely call them whatever you want, right? Just make sure that you study them and that you use them consistently. I use the bodies of single or consecutive candles. If I'm looking for a bearish order block, then that has to be bullish candles. If I'm looking for a bullish order block, then it has to be bearish candles. Yeah, consecutive down close candles, price expands, right? Singular down close candle, what happens? Price closes above it. We get confluence from the fact that we're holding this now as a support level, which we expect to offer resistance. It didn't. Closed above it, holding this area, nice long downside wick showing absorption, bullish engulfing candle, which sets an order block here. It means I'm using this level to look for expansion higher. Now, in the same vein, we're looking at the similar thing here with these up close candles and price closing below here. Now, what you really want to see, or what I would prefer to see here, would have been a move back towards this level, but price has started to sell off relatively aggressively. Now, there's a lot of different kind of thought processes on this at the moment, but what I would say overall, one second. Remember to get at least a sip of my tea before it sits there and goes cold like most shows. What I would say at the moment is you're looking at market exposure overall. If we look at traditional markets, if we look at what's going on in the US, right, you've got the little bit of tensions there. One thing you've got overall, the tariff situation is still there. The EU is showing a relative bit of strength against the US at the moment. There's fiscal stimulus coming into the EU. We've got the DAX, which is the German stock market, which is setting all-time high after all-time high, probably a little bit overextended, but very, very difficult to fade those rallies. Germany's under, because of the conditions in Europe at the moment, they're able to deploy very aggressive fiscal stimulus that's based on either weapons spending, I believe, but the caveat within that is also infrastructure. So you've got that money being spent. Europe is following suit. Lagarde is still talking relatively dovish in terms of it's looking like there's more rate cuts on the horizon for Europe than there will be for the US. So when we factor all of these kind of things in, the reason that is because we keep such a close eye on the dollar, right? The dollar swings in and out of correlation. However, typically a strong dollar isn't the best thing for risk assets. We've not really seen that. The dollar has been coming under pressure from the US as well, right? Which is why it hasn't really been the best proxy, hasn't been the best correlation recently, because the US, believe it or not, want a lower dollar. The dollar is massively overextended at the moment. We are seeing a little bit of, I don't want to say weakness in the US. We know the situation in the US. The GDP print actually came in slightly more positive, yet it failed to really catalyze any kind of major reaction last week, which I did find surprising, because I don't think the low job numbers print was enough to really kind of push things back. Anyway, if we're focusing a lot more here on the price action, I just want to give you guys the overall picture here. We are going to take a look at the news drivers for this week as well. But that's why in here, I was just expecting a move lower. Now, I don't know if I'm right or wrong. What I am thinking here is I look at the daily chart, and again, what do I want? I want clear and I want obvious. What's slapping me in the face here and telling me that price is going to reverse here? I don't really know. Possibly a Fibonacci. I'm not a great user of Fibonacci's, to be honest, but I do think they have exceptional power. From everything from the premise of self-fulfilling prophecies. If you get enough people believing in something, then typically they can make it happen. And I know some exceptionally good Fibonacci traders as well. The reason I'm saying that I don't use it enough is because I don't want to mislead you on my analysis here. That's why I keep it so basic. However, I know that a lot of bots, algos, systems, traders, people like that will be looking here at the golden pocket, right? And I include that this is the 618, 0.618 to the 0.66, which is why I'm really interested in down to the 705 as well. You know, we're not really seeing a major reaction in here. We are in the lower 50% of this range from the recent expansion now as well, showing that this thing probably is, you know, or could very well be looking into a kind of semi-ranging environment here. We also need to remember that from a traditional market perspective, a lot of the major funds are going to be looking at, and central bank bits and pieces, basically what in crypto terms people would talk about as institutional money, probably in expecting a little bit of a lull through June into July, because we've got no major catalyst coming through into August. So there's a lot of talk about you know, this recent kind of sell-off in equities and the dollar being because a lot of people are kind of overexposed a little bit to both. You've also got, you know, a lot of foreign investment not buying up the dollar that aggressively at the moment as well, and probably being a bit overweight the dollar. So starting to shed that, selling pressure stepping into the market on that front, people taking profit on equities. You know, you're looking at the major runs that we've had in technology stocks propping up the NASDAQ, the S&P 500, etc. When we kind of just look at that whole thing, it makes sense to me that we're seeing this kind of period of cooling off, right? So that's kind of, you know, in a nutshell, a little bit why I'm expecting this pullback in risk markets here. Well, you know, we are going to kind of look at this a little bit closer as well on some other time frames, but something else I just want to do here as well is just, you know, just take a look at our moving average here. All right, so we are quite aggressively away from the moving average here. And if we just do this, right, we can see that Bitcoin can spend huge amounts of time overextended away from these. But it does get to a point where you look, we had that major initial rally. What do we have? We had the deviation below here, kind of a little bit messier, but actually, you know, we had that initial breakout back here, price got back below. Then we had the breakout here, the kind of over and under move before we had that expansion. This ends up being the deviation. We see this massive run, a little bit like this. First kind of false move, deviation, price running hot. No, we haven't seen the same expansion higher, but, you know, price does love to mean revert back towards these levels. I'm not saying that's going to happen now, right? And actually, I think it's a lot of strength that Bitcoin is so far above. You know, you start looking at this on alts as well. It's very, very difficult. Cypher, my brother, how are you doing? Sorry, man, I didn't see you in there. Cypher, really, really exceptional trader, guys. Make sure you are checking out his stuff. Got introduced to this dude a little while ago and absolutely love it from a price action perspective. Love to see it. Reminds me of my old days of, you know, swing trading. So I typically, you know, do it as an intraday trader now as well, but please do go and give this legend a follow. Cypher _1x. Great to have you with us, my friend. Probably one of the most underrated accounts on X. You know, I think definitely sub 5,000 followers, which is really, you know, quite a joke. If you want to really learn about that type of price action, do go and check him out. Really, really one of the good guys. No affiliation, just a real pleasure to see such, you know, young, talented traders coming through. Anyway, back to this. So the 200 period moving average is something. Why? Because major funds will watch this, right? I know everybody still thinks the degens run the crypto world, but they don't. The dynamic has changed significantly, which is why, and I'm not going to go into it in this show, which is why we're seeing a different exposure to alts than we've seen before, which is why, you know, we have to be so much more selective in our due diligence and the narratives that we're selecting. You know, henceforth why the amazing team we've got over at the Bird Nest has been really heavily focused for a long time now. AI, utilities, real world assets, these kind of plays that have a lot of body to it. Basically, you know, whatever market you're in, there is a flight to quality, right? In any times, especially times of uncertainty, and Trump with the tariffs, the state of the current, you know, the current macroeconomic, less so, but definitely the geopolitical situations are, you know, have the market swimming with risk. And that's why we're seeing these just such explosive moves off of just the smallest kind of, you know, not saying they're small or insignificant, but based on news and fundamental drivers. Burnside, you legend. Thank you, mate. Elon Musk, apparently, hey, love you, as always. Thank you very much. Wanted to ask, do you think Wednesday is a good time to launch our projects? Would you recommend waiting for better market conditions? Appreciate your thoughts. Also, if you have a moment, loves, take a look at our website. Pepe Pot Fund, thanks so much. I mean, it's not really my area of expertise, my friend. I had this amazing team that I work with at the Bird Nest on the fundamental side who do all of this for me. What I would say is that I do expect there to be a continuation on the risk bid through the summer. That's where I stand at the moment. I actually think there's probably going to be a cooling off over the next X amount of period, possibly, June, maybe into July. The reason for that is because of the, just where the capital is being deployed in terms of risk markets being a little bit overextended, the dollar potentially finding a little bit of bottom and cooling off. Obviously we have news catalysts to come through as well. But what I would say is that there's probably, if you look at what's going on in Europe, fiscal stimulus will probably have to come into the US at some point, especially when they start the major bond buybacks to control, the fiscal deficit. They're quite a long way away from their targets in terms of GDP, right? They want the debt to be, around about 3% of that. I could get this wrong, actually, and I would normally lean very heavily on my macro fan in that respect, which is just wonderful, wonderful people. And I do study this myself, but I do always tip my hat to those in the market. People like London Crypto Club, Macro Alf is just an unbelievable person to follow as well. I mean, there are just some absolute gems out there as well. I mean, if you're not following capital flows, for example, you are probably doing yourself a massive disadvantage. His newsletter is one of the first things that I read, along with London Crypto Club as well. Macro Alf, Macro Alf does an amazing podcast with Brent Donnelly, by the way, on Spotify, called the Macro Compass. Please do go and check that out. I don't have affiliation with any of these guys. I've had the pleasure of sitting down and interviewing and spending a bit of time with Alf. I had a real pleasure of meeting the guys at London Crypto Club, a Coinbase event in London with my dear friend Macro CRG. But just some of the best people I've come across in this space. And one of the things that they're all aligned to is the fact that this risk market isn't over yet. I imagine that we're going to see some kind of cooling. I think as fiscal stimulus comes into the market, I think we can see some really explosive moves. Like any project, I would look at it from a business perspective and I would say to myself, look, this is going to be, probably a relatively short continuation of the bull run here. Very, very aggressive, great fundamentals, excellent teams and great communities of what's going to make you survive through a bear market. Make sure you've got those things in place and, good product market fit, especially if you've got good partnerships on the horizon. Ideally, if you're generating any kind of revenue and minimum you have proof of concept, then they're really, really good things that, investors will look for. But like I say, not my area of specialty, especially in crypto. I used to build businesses, so that's typically the way that I look at it from that perspective, but not digital businesses apart from the marketing firm, obviously. So just hopefully that's been helpful there. We will crack on some alts, guys, as well. We are going to look at that as well as the news. Just going to run through some questions quickly. Gron couldn't agree more. Major bull isn't until Q4. Risk off through the summer. Small pump 2 weeks pre-July. Rate cut and sold off until September, October. Yeah, I mean, look, I love the conviction of that. I think that's definitely a play that's in, I think, a lot of people, not a lot of people, I think a lot of educated people, and I don't mean Harvard, Oxford, etc. I mean people that have spent a lot of time in the trenches here will look with a similar view, right? Typically, the market works in a way of Max Payne, right? How can you get you to the point at which you're just about to give everything up and then the market just explodes, right? This is a great example of it here. I mean, this even more so. This was brutal, right? Coming into this area, by the way, when you're looking at these moves start to lose momentum, yeah, just look at the difference in size of expansion is one thing. Not saying this is the be all and end all, of course, but the size of the expansion from the lows to the highs of moves. All right, I'm classing that high there because I think we have a low to a high within here as well. So then the next expansion becomes this. Right, something like this. I know it's not the cleanest in the world, is it? But, just for example, right? So if we now kind of pull them apart and we say to ourselves, all right, how do they stack up with one another? You can see the diminishing returns. You can see the market starting to cool off. People that are far better at this with me with volume will also tell you, even if you're looking at it on a very, very, very basic scale like this, right? And you can put a moving average onto this thing as well. In fact, let's engage our moving average. I think we want it to be the 200, right? Something a bit smoother, maybe like the 100 period moving average on here. Maybe a little bit more aggressive than that, maybe the 50. It's just really to kind of signal that you can see it's just grinding up here, and then you can just see the volume starting to drop away here, right? And then yes, you do get these outlier spikes, right? But you're not getting this. Look at these spikes, consistently high. Basically, think of it almost in higher highs. This looks pretty flat through here, but it's consistent. It's rising. It's rising. It's rising. It's rising. It peaks, and then ultimately it looks to lose volume. But like I say, I'm certainly not a major user of volume, but I do look at it in that respect. So as the peaks start to lessen, that's when we expect things to cool off a little bit. You get the euphoria, similar situation here, massive pump here, slightly lesser pump here. It now makes sense for price to kind of come back down. However, it is in a stable area in my opinion, but often, these large overextended periods away from the 200 period moving average might just mean that we're moving into a period of chop. We get that explosive move higher before price starts to correct a little bit lower. So before we just run through the rest of the markets, I think it's actually important that we just pop ourselves over and take a look at the news events for the week. So obviously, week starting Monday, the 2nd of June. Where is the time going? Shay, hello, my friend. I'm really starting to sound like my parents or people of my parents' age when I was young. Don't wish your life away with the time going. Anyway, focus heavily on the red folder news, but we do have a lot of FOMC speakers. All right, now we can see this is all in London time, by the way. Now we can see over here FOC member Waller speaks. Now, crypto heads should like Waller because Waller is very, very pro, unlike the rest of the FOMC at the moment, rate cuts and basically a little bit of stimulus into the economy. So really the kind of outspoken person in that regard. So definitely one to keep an eye on. Later on today, we have ISM manufacturing PMI and ISM manufacturing prices. Obviously, we focus on the PMI, but let's not forget 6 o'clock tonight, Fed Chair Powell speaks. Now, what's significant about this? There's very, very, very unlikely that he turns up and delivers some really groundbreaking news. If he does, the markets are going to bolt one way or the other. If he's extremely hawkish being akin to bearish, meaning that he's going to state that we are, GDP isn't as strong as it's coming through. The actual, whatever the preliminary data isn't pointing to inflation being where we want it to be. We could be looking at, maybe we won't be able to do 2 more rate cuts, or maybe there's no more cuts on the horizon. That would be the real kind of hawkish tone. That would be, that would have the market scrambling, moving away from risk assets towards defensive stocks, etc. However, I don't think that's going to be the case. If he came out and was particularly dovish, the ECB at the moment, Lagarde, they're kind of more in a sort of dovish term where they're kind of talking about the extension of rates potentially, or the fact that they're not looking at any disruption in that front, that they're happy with GDP where it is, happy with where inflation is heading. If we see similar tones coming out of Powell, then that could be a nice catalyst for the risk markets. Typically, Monday can be a little bit, I want to say consolidation. You can always see moves on a Monday as the market, reacts to what's closing out on a Friday. However, I typically look for that Monday range to develop. So I'll be watching this quite keenly, but I'm not expecting major fireworks. As we move into Tuesday, we can see down here, as we're looking at this, obviously focus on the US market. It's the biggest market in the world. The dollar is the reserve currency. So I know some of you come on here just like, why always looking at the US markets? Blah, 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 blah. Why not Europe? Because Europe doesn't fucking control the world. It's, well, I'd say unfortunately, but I don't think it is unfortunately, to be honest. But the US is the dominant economy in the world, and it has the world's reserve currency. So that's what we will look at the most, because strength in that economy, strength in the dollar, we can decant that into other countries, into other assets, etc. I do watch China closely as well. I don't really cover it on this show, but huge market, very, very, very hungry, aggressive, business people as well, very, very smart, incredibly hard workers. So always to watch that. There's that kind of struggle of power going between the US and China at the moment. Read an amazing short book recently about how the power struggle is actually a lot more akin to the fact that the US is quite scared of, or very cautious anyway, of China's massive rise in the technology space. They were always seen as a manufacturing hub, right, where you could get cheap manufacturing, production of goods, but they just stepped into this space. They learned everything along the way. They basically outsmarted a lot of the Western stuff. You've got to have huge respect for that, and they've now become an absolute tech superpower, from having literally a couple of percent of the world share to probably about 40-50% of it. If you look at it on a major scale, if you were looking at the split between them and the US, not considering the rest of the world, but they're the two major giants. Anyway, job openings, want to take a look at that again, all basing around the health of the economy. Don't really expect too much from that Wednesday. We roll in to ISM Services PMI. Why is Services PMI important, right? And manufacturing PMI as well, is to show kind of the health of the economy, really. That's what it's being used as a gauge as. However, most of the impact from these will be taken in the preliminary data. So again, unless there's a really, really big miss one way or the other, not really expecting that to move the dial. And unemployment claims, this was an interesting one, right? Because it was just last week we had the really good, the numbers on this were a little bit lower. If we pop onto this, look, so May 29th, forecast was 229,000, actually 240. So they were out on that one. More people unemployed than they assumed. The miss wasn't probably quite big enough in terms of a percentage to really move the markets in a major way. However, probably enough to mute what was a good GDP print. I was certainly in the boat that I thought a good print on GDP, which came in 0.1% better than forecast, would have been a catalyst to really rocket the markets. And it was when it didn't really have any major effect is when I started moving a little bit towards a kind of neutral to risk off stance, just heading in short term. Now, we need to remember the major thing at the moment that isn't shown on here is that it's earnings season, so we need to keep an eye on that. And then through on Friday, unemployment rate, non-farm employment change. Okay, so if you ever want to know what they are, a really great way to do this on Forex Factory. Again, no affiliation, just really, really handy. As you can see in it here, right? Just gives you everything you need to know. The measure, what is it? Change the number of employed people during the previous month. This is the key caveat, excluding the farming industry, all right? Tells you the effect on that, why it's interesting for trader. Job creation is an important leading indicator. You don't get tons of those, right? So leading indicator of consumer spending, right? Which accounts for the majority of overall economic activity. Is the economy healthy? Do people have money in their pocket to spend? If they do, typically, there's a couple of things. There's normally relatively decent for risk markets, all right? Especially if you've got a flat currency like a flat dollar, but then you're also kind of looking at it from the perspective that it stands to drive inflation up potentially as well. However, at the moment we're looking pretty healthy across the board on that, so no major expectations, but we are going to keep an eye on earnings. So anyway, hopefully that was of interest. We're going to take a very quick look across the risk markets, and then if you do have any crypto you would like me to take a look at or any tickers, please do let me know and we will chart them. We've got about 15-20 minutes left in the show, so if you do want anything taken a look at, please do pop it in the comments. Now, let's start with this. So the NASDAQ, where are we at the moment? So let's just rid of all of this from the presentation the other day. 1 second. Pretty sure I did this on Trading Views. Binned me off, but yes, as our Polish friends say. So again, here, this is a really good example of how this respects the 200 period moving average, right? And now what you would do is you would normally use a faster period moving average to this as well as a slower one. So you might employ, say, like a 50, 20, etc. So this is giving you your underlying trend. And then you're looking for pullbacks to a shorter period moving average here. In fact, what I can do is add this. Pretty sure 2050 and the 200 here, right? So we can even just get rid of that for a moment, even if you're just using the two. Very, very, very simple way to look at this. But if we look at the purple line under here, the 200 period, when price does really start to get extended away from this, you do see these corrective moves, all right? A lot of people will measure this in terms of standard deviations, bits and pieces like that. Yeah, AVAX and SOL, no problem, guys. Let me just write that down, AVAX. Solana, definitely take a look at those. Like this one as well, right? So look, when you have these levels, and it would be the same here, right? Why you want to kind of see retest of these levels, it's like any form of support and resistance, right? We're looking at the candles. So when you get a strong body close below here, you know, I'm then looking at the context around it. What do I have here, right? You know, do I see any kind of patterns I can do? I'd rather wait for price to kind of get back to re-engage here. I don't know if this is a deviation. If it is and price wants to step back above, I'm going to see typically a large body candle close above and then start to see these wicks showing absorption, right? So, for example, when we retest this one here, this is a beautiful long downside wick here on this doji candle. We step back in. This is the kind of area we can say, look, we've seen a retest of this level. What else does this entail? Well, this was the area that broke down below the moving average. This is the consolidation that led to the pump. We've retested that, and then we're away. However, the difference with this one, is we get back here. Is this a deviation? Look at the long wicks getting rejected here, at the 50-period moving average. Price sells off. We've got a pre-made target down here in the 200. Price regains this, gets back above, right? Now, look at the difference here. We close above here, strong body close. But look how when price gets back to the moving average, we're not seeing those long downside wicks, like we saw these upside wicks here, like we saw these downside wicks here, showing the absorption, the buyers stepping into the market. Then you want to see these aggressive expansions, okay? What we saw here is price failed to retest an aggressive expansion below, some consolidation, and then look, the long downside wick. Yes, we got the recovery, but ultimately this area then was for selling, all right? Difference, closed above, long downside wick, showing the absorption. We even gapped up on this one, which is a great example of how we can look to move higher. So with that in mind, just looking at this as an overall health check, why is this important? Because we're talking about the basket of risk assets here. It's an index that contains the most technology stocks. So it's the thing that's going to trade most like Bitcoin. Now I know, and Scott covers this wonderfully on his show, Crypto Town Hall, for which it's a pleasure to always be part of that with such good minds, and Scott's such a top guy. But you know, Scott's a very, very firm believer that Bitcoin is decoupling from risk markets. You know, there's another amazing analyst on there, a guy called Dave, who always has some really great input, as well as everyone else on there, with people like Gary Cardone, the legend that is Follis, people like that, right? Some really well-informed people. But it's interesting, you know, looking at this kind of correlation. Are they correlated? Aren't they correlated? Well, whenever you believe about that, typically money going into risk markets, is a good thing for crypto, or it's like a beta risk asset. Okay, so for crypto in general and for Bitcoin, if risk markets are prosperous, typically it paints a good picture for cryptocurrency. All right. So anyway, where are we with this? Well, we're a little bit further away, but look, we got the 200-period moving average, which is ticking up here. Now, what we need to remember here is this is what you would call the death cross. All right. So this right here is where a longer term moving average moves above a shorter term moving average, all right? So this area here is under the spotlight, because then people are basically saying, oh my God, this thing's doomed. It's all going to sell off. What you notice is we did get a little bit of downwards movement here, all right? Which is absolutely fine and to be expected. However, moving averages are a lagging indicator, right? This is looking 200 periods back. This is looking 50 periods back in terms of days. So it's a little bit of a tricky one to decant. However, what we can see here is both of them are starting to move back up again. So once more, it gives us the opportunity to say, okay, well, look, we've recently reclaimed the 200 period moving average here. Maybe price is coming back down to this level here, you know, to consolidate. And by that, I mean to consolidate his position above it before moving higher. So while we're in this period, it's not really telling us too much, right? Because we're bullish above the 200 period moving average. We got the shorter term moving average starting to turn up now. Then again, we want to see that cross here, but any prosperous movement like this is going to be reflected a lot later on the moving averages, okay? So with this at the moment looking pretty healthy. Now I'm going to turn the moving averages off, because that's pretty much the mainstay for how I use that. You can do things like Z-score and stuff like that as well, working out Sharp ratio and bits and pieces, but not really one to go into at the moment. I'm going to drop this down onto a lower time frame, however, and talk about how this is actionable. So what we can see in here is this. Now I wonder if I actually, here we go. So look at this recently, right? Quite simply, this was a very clear and obvious 4-hour gap after a large expansion. If price is going to move higher from this, I would expect this gap to hold. It didn't. So I explained that quite simply from this candle down, I was bearish down until this low, right? This low here offered some really nice support. all right, which we see here. We also had the pleasure of this gap as well, right? But again, the gap was lost pretty quickly. The gap was lost here, making this purple, making that resistance. So what do we see? A little bit of support. We lose the support here. We're now retesting an area of resistance. So what does it tell me? Well, it tells me that this has been the key kind of area here. So now I want to see price back above this. Price back above this. Yes, we need to be cautious of this area here, right? Because we've got, you look at that as a balanced price range, bullish gap here, close through with a bearish gap. These kind of areas can prove tricky. We've had this large sell-off now. What it means is people that were caught offside up here, that have been squeezed, if the price returns to this kind of area, you could see some position selling off as people mitigate here, all right? However, I think, most of this has been done pretty quickly, right? So people offside are very, very underwater at this point. This large expansion here failed to get us back in. But obviously, we were looking at the kind of Trump news on China, and there's other things to decant into this. Ultimately, I want to see price back above this level here. And then I think, risk assets can really, really run. The first kind of point of that would be seeing price close above these candles here, down close candles. Price closing above this would set a bullish order block here. However, the high probability one would be from these candles down here, because these are the ones that took liquidity. So seeing price get back above this level, showing that buyers are back in control. And that's what I'm looking at on the NASDAQ. So with the dollar, which is a really, really interesting one here as well. Again, kind of going back to what I was harping on about earlier, how this plays into risk markets, how this plays into our thought process of how we're approaching the market. What's our exposure to risk? Do we need to be hedging at this stage? Do we want to diversify the portfolio? If you're thinking in that respect, or maybe you're fully just exposed to crypto, well, that's absolutely fine. Either way, you need to understand these things for the picture that's being painted for risk markets. Now, what we can see down here is the dollar, right? We've kind of set these, we've just kind of swept out this low here, but kind of made this double bottom. Now, some traders will look at these, double tops as elements to sell off, double bottoms as ones that can be bought into. Either way, for me, this level is significant. It's kind of a mid-range of a range that I have had in play for probably longer than I care to admit. Yeah, a long time. All right, before we even stepped into 2020, right? I think maybe even sort of back to 2017. But anyway, these are levels I'm interested in because, unless there's key drivers behind the dollar, which there is at the moment, the US, really trying to get the dollar lower. It's very good for trade. It has been overextended up to here. It is coming back down to its kind of mean. This is something that we can definitely put a moving average onto as well on the daily scale. And we can see this, look. So from the support all the way under here, look how we lost this down here. Let me just turn the range off. Yeah, how we lost this down here. But look what a beautiful job the short-term moving average did. And again, look, while you're holding this, you look for those big sell-offs, right? And then you look for the retest. We didn't get quite up to there, right? But look, and it's not quite this, and I really do wish it was, because it's just such a fantastic pattern to trade. But it was very, very close to being an evening star pattern, right? Which you have a large expansion candle, a doji, and then a large bearish expansion candle in this case, or the candle going the opposite direction, which then is a really, really high probability reversal signal. An argument, this is one here, although the body's maybe not that big. But anyway, really, really good things to watch out for. We can see here, though, we're really, really trapped under the short-term moving average here. We've had the cross that's obviously come on here. So we've got the longer term moving average now moved above the shorter term moving average because it's decanting what happened all the way back here, so yeah, it's just, it just is an interesting one. Sorry, the death cross, which is decanting all of this move down here, right? So for people that look for these to kind of pull back to, it can be a little bit of a late indicator, in the same way that when you have the bullish cross here, yes, we did still see some upside, but obviously this is representative of all of this move here before you get that signal. One of the good things with these that you can look at is typically, the directional trend of them. This is very, very steep decline here. So any recovery of this and market structure for me would be a sign to just maybe throw a little bit of caution towards risk markets, because it could be a sign that money is flowing more into risk-off assets. The dollar, always seen as a real safe haven as the world's reserve currency. Has it bottomed at the moment? I'm not overly sure, but what I would say is it certainly doesn't look like a sell down here for me. So anyway, now we finish on that, let's take a look at some crypto, shall we? We're going to start on Ethereum, see how the play's planned out. So we always use the same charts, by the way, guys. So just these crypto charts. So we can always see how the moves have played out that we were forecasting from previous weeks, because it's important to have accountability, right? So forgive all the obviously choppy bits and pieces, but as we said, this is the key point of rejection. Why? We're just using the same principles we discussed last time, right? So a few things here. This is the order block that was set when price sold off aggressively here. Now, the body of this candle did see a long response wick down here. However, it closed well below this level, well below the low of this candle, expecting price to seek liquidity lower, which it obviously did, but it did so in the same candle. Now, we saw that continue. Yeah, large expansion candle here. This candle closed below this candle's low. We had this inside day here, but then this bearish engulfing closed below this low, and again and again. Now, when we come down to a point of support, as we discussed really openly with here, this is the key buy zone for ETH. So the buys worked out really, really well. But as I said, in terms of short-term swing positions, this is about as high as I want to take it with ETH at the moment until we establish ourselves back over this consolidation. I want to see price mitigate that area, meaning that when price is bullish, for this example, right, let's just draw this across here, again, focusing on the bodies. And let's do this in a really bright, obnoxious color so it stands out. This consolidation here, this down close candle led to this pump higher. When price comes back into this level, looking for this to hold and provide a springboard for price to move higher. Weakness at this level, like we saw here, and especially when we close below it, this for me then means that the strength that was here, or the buyers that were here, have been exhausted, meaning that price is then seeking fair value lower. Where was it considered fair value before? The consolidation before that big pump. So we look at that, and then we look at reactions at the lows of those levels. What did we get here? Price closed below it, just as we were discussing previously. So we expect price to continue to move down until it gives us an indication that it's ready to go the other way. Now, this again is a shame, because I thought that we might get the doji off the back of this large expansion candle. If this candle had happened here, again, it would have been this would have been a morning star pattern, a great reversal pattern. However, we see the doji indecision, see the secondary doji here, the large expansion candle that's here, closed above this bearish gap that exists within the low of that candle here and the high of this candle. Everything here pointed to the fact that we should be able to see expansion at least to the new high, to these highs. We saw it to this high, smashed through it. Then this was the next level of rejection. Price has ultimately been stuck there. And we were looking here to say, if we wanted that continuation into here, you don't see me do this very often on the charts, but ultimately when you see a large expansion, you look for a consolidation, ideally a bull flag or a falling wedge, the breakout of these to then lead price higher. Now, we didn't quite get the projected target, as you can see from the long position that was on here, but it wasn't bad. Ultimately, we made some money, but we didn't manage to get back above this high. When we got the close back below this level, then what did we say previously? You then expect price to be seeking liquidity lower. So on a daily scale, what does this really tell us? Let me just hide these for a bit. We can always put them back on the screen later. We'll leave them there for a minute. Hopefully they're not too distracting for you, just because I want you guys to always see the analysis that we've done in previous weeks, right? Ultimately it's, hindsight trading is everywhere. We're using this to formulate plans that we take into every week with actionable setups, okay? So here, really, really simple, small gap, close below, large bearish pin bar here, yeah, or an inverse hammer, and shooting star, however you want to look at it. Basically, really large upside, not quite shooting star, but large upside wick, decent sized body here. Think of it almost like a weight. Yeah, that's the weight is leading this down. And then the follow up here from this candle really tells me the price is seeking liquidity lower. Where's the first point of that liquidity? Is here. So this is the area that I'm going to look at. Am I going to be actively shorting into this here? No, I'm not. We've got this bearish gap that's developed above us here. So on a daily scale, what could we look at here? I'm going to do this in red for you guys, right? So you can tell that this is a bearish gap here. If we run this here, then a decent reaction here, and I could look at intraday longs or very, very short swings into this area here, right? But then I want to see how price reacts here. Typically within these gaps, you're looking for a move into that and then a move away. However, if we closed above this, I'd look for that area to be retested, and then my firm belief is that we're coming up to make a move on the highs. So that kind of all of a sudden has now set my condition unless we go above that. If we close below this low here, however, I would then look for retests of this low and then be looking at the liquidity that's resting below here, right? Also considering the fact that we've got down here a higher time frame gap. Yeah, this weekly gap, which we haven't retested. All right, so that could be a case for price to draw lower, get lots of people offside, get people whinging and moaning that the bull market's over, this is all crap, I've been scammed, blah 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 blah. And I don't mean that if you've genuinely been scammed, by the way, but just people that talk about the market in the way that losing a trade is being scammed. It's all, you know, brutal in its brutality, right? You're going up against the sharpest minds and most resourced people in the world, but you know, the market does what the market does. So for me, getting people offside here, getting everybody feeling short to only see a reaction here and this thing to absolutely send would make a lot of sense to me. The other thing that we need to consider here as well is that we move into a large period of ranging. All right, if we look at some of these previous consolidations before we had a key breakdown, we were here. What were we? We were 24 days for that, weren't we? This one was even more brutal. This one was, we got the breakout on the 32nd day. So again, you know, we're not miles away from this now. I think we're probably kind of approaching that threshold. All right, quick flush down into this level, some muted news or a deal agreed with China or whatever, or, you know, some backing away of the escalations, and the thing can absolutely rip. All right, so in terms of ETH, the daily plan is, we haven't got the expansions we want. We are seeing rejection here. Makes sense for price to be heading down to a key liquidity pool lower. It's not been accepted above this level. So I'm looking for this to certainly run this low first of all, which is 2,466, and then potentially move down into these lows down here, which is sat in and around, let's have a look, 2,331. Okay, on the 4 hour, which is our most aggressive time frame as we see here. See you later, Craigie boy. Apologies, mate. I will cover AVAX for you in a second. So if you catch the recording of this, it will be there ready to go for you. This was an area we were interested in. Why? Because it was providing a join gaps that had been supporting the market. Now, once we close below these, what do we expect? An area that offers support turns to resistance, right? So we expect price to flush out a little bit lower. And again, we got the same target here. This is the key area that we're looking at. So price to run this, how price reacts here. If we see a long downside wick and recovery, I think we're moving up to this gap here, reassess when we're in this gap, get back above this gap, we move higher, reject from this gap, and I think we're looking towards the weekly gap below. So let's take a look at AVAX for our friend Craigie boy, who's unfortunately just had to nip away. So take a look on here. Oh, nice. Okay, because we normally do this on our OKX chart, don't we, with AVAX? So we've got a nice clean chart here. So on a weekly scale, let's have a look at where we are. So we got this weekly gap over here. Also, maybe this kind of hasn't quite tagged it yet, but this consolidation in here before price really ripped. Just trying to see if we've got anything really clear and obvious here in terms of like support and resistance. Possibly this. Yeah, so this held the low, small deviation when price closed under here, got above, retest, held, sold off below, retest, sold off, closed above, retested this area, saw a massive pump here. We're now back down at this area of support, and we've seen this nice reaction straight off the bat. Price looking a little bit weak here on a weekly scale. Again, if we just look at the candles here, first of all, we can see the long upside wicks here showing a little bit of absorption. Sellers kind of starting to regain control. Nothing major to write home about here or here. We swept liquidity in here coming back in this range, meaning that we could be expecting a move down towards the lows here. We didn't see that. Right, we got that. Then price set up the doji. We took the lows from here and stepped back inside the range. Ultimately, smaller candle here. We haven't seen any conviction, but this one really tells us a lot, right? Because we've closed below the prior week's low here, meaning we now see this as resistance. We've closed quite deep into this consolidation as well. That kind of pumped price higher. We do have a low here, which is down at 19,090. which I would definitely be looking at across here. For price to move down into. It's been a decent move off the lows here. I do think if we see price get back above this level, and again, we need a weekly close, but I think we could see some continuation. But, you know, ultimately we need to see price back above the body of this candle ring and ideally the high to signify that the buyers have stepped in any major way. If we move to the daily here, again, we can see some nice conditions, right? Yeah, price is kind of holding this bullish gap over here. It did a really good job through a fairly extended period. This, just do it in green so you guys can see support through here, back up. Then look how price kind of slices through it, closes below this low. If I'm reusing a gap here, the gap's been rebalanced to here, so I'm expecting the buyers to be here because that's where the liquidity is, right? That's when the sell stops are engaged, breakout traders are induced, etc. So if the price is going to reverse, I expect to see sharp reactions here. We didn't. Price just closed through it aggressively, right? So with that, no, we haven't inverted this gap. Yeah, on a daily scale, we need to see price close beneath it. If we do get the close beneath it, the chances of us taking liquidity from this low and lower heightens greatly because we do have that inversion. Let's look at a reverse of this, or not a reverse, sorry, but an example of this here, right? Hold support, closes beneath it here. So what do we expect? We expect price to come down and seek liquidity below this low. We don't quite get there here, but we do take liquidity from this low. Yeah, as you can see here, just to show you that it stands out. If we draw this way, you can see that it's lower, yeah, than this one here, making it a low. And then just this tells us a lot. I expected price to come down and take out this. To be honest, I just thought it was a more significant low, but actually price was quite strong here. The consolidation that led to that large move higher gets retested. This low, look how price just can't displace below it. Look at the difference between the reaction here versus the reaction here. So even here, right, you see this bullish engulfing candle. This is where you get prepped. You wait for price to pull back, ideally take some form of liquidity, or, you know, the common misconception in trading is if you're bullish that you jump into the market and just start longing. Certainly not how I look at it. And, you know, I've been fortunate enough to work with some very, very exceptional traders, and pretty much in a similar way, however you're doing it across different time frames, the idea is that you want to wait for that move down to position yourself. You know, you're improving your risk to reward, but also wait for that move that catches people offside, target the key liquidity pool, and then price rips. The opposite of what happened here. Price just smashed through it, right? So returns to here, in my opinion, are for shorting, although price could just be too heavy here. Which it does look like. Anyway, if we invert this, then I expect us to take out this low. However, we have rebalanced it. So as an immediate target to the low, yeah, we're looking at that at 19,788. Again, I'd need to see price. I need to see this candle close and then price close back above this candle here. If we close below the bodies of these candles here, we do then have a bearish order block to contend with. When we're leaving large inefficiencies like these, the market does like to rebalance these. So, you know, there's nothing to say that we couldn't see something like this, an aggressive move from here back up above this to engage with this before price moves lower, right? Doesn't mean that I'm bearish overall. It just means the conditions that I set for myself say that I need to be cautious in here. If this does invert, it becomes resistance, so I would want to see price then close back above this before I think AVAX is then going to have a real run. Just looking at this on the 4 hour, and we are going to close up shortly, guys. I know I've rattled on a little bit longer, but I think there's some kind of hopefully covered some important topics. We will look at Solana as well, Shay, before the end. This looks like a good consolidation for me. What could I use as conditions on this front? Well, we can see that we've just snuck out the bottom of this. I mean, yeah, I think this is going to run the lows, personally. If we get back above this, violate this, and we close above this candle body high, then I think we're ripping higher. But this was a nice bullish gap, supported price through all of here. We failed to really get any momentum higher. Long upside wicks, just showing the buyers, just pushing price down, down, down. Now we're in here. We do need to be careful of this low here, but beyond that, then, you know, this is the key liquidity pool, and this is pretty much, you know, where I'd be looking for price to target. So like with everything, what you notice is, you know, I'm just trying to step into the charts every day, and I'm never marrying a bias. Yes, we're bearish at the moment. We have dropped quite a long way here. We could easily see a relief bounce on a 4 hour scale. If we get back above here, there's a lot of liquidity resting in these points here, and we've got this line up here to retest. So that would be my intraday play. While we wait below here, I'm expecting weakness down to the lows. One thing I don't really like, or I'm a little bit questioning of, is just it's a smidgen of a close outside of this. And in crypto, you know, it can be a little bit unclean sometimes. So I would have preferred a larger body close below this. However, I'm humble. I'm sat here ready to take my medicine. If price draws into this and I want to short this lower, I think that's a well-educated trade. We can look under the same principle of that being the last low pre-break as well. This could provide a good area for price to come down. If we just grind up and we're seeing strength through here and this isn't acting like resistance, then we can wait for confirmation as we get back above there and here, and then look to trade that higher. So USD A3Z4KMI, very welcome. Thank you for the comment, mate. Can't wait for the pump. Yeah, look, I do think the market loves to frustrate people. We haven't seen what a lot of people wanted to see. So many people sitting there asking about when's alt season, when are we going to get these opportunities? When can we just throw a dartboard at a cryptocurrency name and make 100x like they used to do back in the day? It's just a little bit more advanced now, I think, and also much more saturated. I'm not suggesting that's what you're saying, by the way, my friend, but, we do just see this a lot in the space. And, there's thousands, tens of thousands or more memes just getting launched on all these different silly little platforms and all these other things coming up that have absolutely zero use in the world, as well as most of the shit coins that are out there. Some of them are exceptionally good, run by very, very, very good teams. And the challenge is finding those projects, aligning them with a narrative. And I think that's where we're going to see some of the biggest movers. But speaking of which, Solana has just been a real beast, right? So Solana's been nice. This was a great bit of trend line drawing, which you don't often see from me. So I'm actually quite proud of that. Yeah, just really nice liquidity along here, right? You can just see bodies respecting this. The deviations getting bought up, deviations getting bought up. That was a strong close. That was a perfect retest. This was also a bullish gap here. What were we talking about? We wanted to see this close below, so it inverted. There was a close below. There was the drawback to this area. Retest this small order block, retest the trend line, and price absolutely. I'm not going to say what I was going to say, but price went down aggressively from there. Now, it was expected to a degree because of what we had here. We had a higher time frame bearish gap. All right, if we go back here and we look at this also on the weekly, right, a little bit similar to what we were looking at before. We've drawn into this order block like we were looking at with Ethereum, and price is now seeing this rejection, but we're in this bullish gap here at the moment. This is the daily, which is slightly larger, but there is a weekly one here, which we can see. We haven't really had a retest of this level here, which is 147.46, which is definitely on my radar. But a lot of strength here from Solana, right? And actually not got quite as badly pummeled as some of the others. So, in terms of looking at this for a recovery, it looks basically a carbon copy, doesn't it, of AVAX after the large drop. We're holding the bullish gap in this case, however. And what I do like about this is that we have tagged this consolidation. It's important for me, this, because this was the consolidation here. Shame it didn't run liquidity, but yes, right? Strong expansion. This is the first retest. I think buyers could step in here. And also when we take our high time frame level here, nice to kind of see a wick down into this, see some recovery here, and then I think price can grind a bit higher. We do need to be careful in here, right, because we've obviously got these inefficiencies here. They can either be retraced pretty quickly, or price is looking to, as we saw here, drive into them, find support, drives into the lower one, finds support. Then when you come back into that, you're looking at the reaction at this low. This low doesn't hold, so now we expect liquidity lower. We've got this consolidation, obviously these lows as well, which are important, and this higher time frame level. And notice how they're all kind of clustered in this area. What does that mean? It means I don't want to effing short it down into here because I'm shorting directly down into support. All right, this was actually quite a nice candle. I really enjoyed the doji here. I would have loved to see a large body expansion candle here again. I know I sound like a broken record, but I do love a morning star or an evening star pattern, and that's what we would have seen here. We didn't get it, but we did get a bullish hammer candle. Took liquidity from below the prior day's low. However, we are just talking about a weekend, unfortunately. I know a lot of you weekend warriors out there. Respect and love for you all, but volume's incredibly low with traditional markets being shut. So price could draw into this. The fact that we're kind of getting this quite large body bearish candle at the moment is just showing this kind of echoing the risk off sentiment that we're seeing across the market at the moment as it started. Equity markets are down. By that, I mean the indexes, the NASDAQ, the S&P 500, the Dow Jones. We're seeing a really strong day for gold, and the VIX is elevated as well. None of those paint a very good picture for risk assets. So we wait for those conditions to turn, right? We wait for our key levels to be engaged in, and that's when we look to take the move. Let's just look at it on the 4 hour, see if there's anything else that we can glean from this. Well, actually, it's not the most significant gap, right? But we have had an inversion here. So that's telling me if I was looking at this, I'm saying to myself, right, how's price reacting down here? Good recovery of those lows. I like that, right? Why is that significant? Because I'm just showing you that because we tagged off this order block, then we had that nice little bounce. Now, let's take a look at the highs. Yeah, look what happened. Yeah, set a failure swing here, price came back down, opened, took the high immediately, closed with a bearish engulfing candle. Yes, we did have a bullish gap below us at that point, so not necessarily the best short. But now for me, if price is going to move lower down towards these levels, we've inverted this gap, we've got a key point of resistance. So as I'm looking at this, and again, this would be much more on an intraday basis, that's the play that I'm looking for. Let's watch the reactions here, lose that level, take it level to level on the way down, wait for the key reaction into our key level. If I'm wrong here, what I want to see is a strong expansion candle above it. Yeah, and ideally as well, taking out the high of the previous candle. This has then been violated. This then becomes a bullish order block. And notice how all of a sudden we're saying to ourselves, right, we've now set the basis for this to return. Also, lower low, but a higher high. This could be a higher low in the forming. The expansion from here gives us a really good opportunity to get on board early and trade these higher. But do remember, higher time frame, we're still a little bit cautious here. And whilst we remain below this, it's my opinion that returns to this area, that these rips are potentially for shorting lower. But do please keep in mind the high time frame concept. We have dropped a long way here, so please do manage your risk. Typically with these type of situations, I will either scale down in terms of my position, or I will just sit on the sidelines and wait to see this play out. Obviously I want to see this scenario. You know, prosperous market conditions are always good, but let's just make sure that, you know, we're making ourselves aware of the news, the major catalysts in the market as well. Do keep an eye on earnings, guys, because that is quite important. And one more thing that I just wanted to share with you, because I'm exceptionally proud of it, and I don't really talk about it a lot. It was my great honor to come across when Crypto Burb asked me to join the Burb Nest 3.5-4 years ago now, and about a year after that, so probably for about 2.5 years now, I took over from a wonderful trader, Libsy, and it was a great honor of mine to become head of trading for the Burb Nest. And I've worked with some absolutely magnificent traders there over the years, all of whom I've got an exceptional amount of respect for. Those that are still with us and those that aren't, that have moved on to other things, all really, really good human beings as well as traders, right? But one thing that I don't think that we really do particularly well is share the successes of that trading team. So speaking with our tech department and our CTO, and we've got something quite exciting to share with you. Very soon you're going to be able to see live on our website every day the tracked live performance of the trading team. Every single trade is shared within the Discord. Every single trade is managed for you within the Discord as well. It's just the traders showing the trades they're taking. They're putting the conditions out before the trades are live and the conditions set. Take profit, trade management, everything is put in. Anyway, these are rigorously recorded off exchanges, bits and pieces. So obviously everything is fully transparent and shared with members. So I wanted to just take a moment to show you guys this, because this is the first kind of first point at which we've just got this on a little test server at the moment. We can see this here. So these were April statistics. All right, you can see here there were a total of 40 calls across the team. They range from intraday calls, swings, position calls, etc. And of the 40 calls, there was a 75% win rate throughout April. So the total profit percentage was 375.94, which averaged out as a 9.4% per call. All right, the thing that I'm really interested in, especially being an intraday trader, because I don't typically contribute much towards the overall percentage gains because I'm doing it on such a low time frame. The average calls you're getting over one a day, average risk to reward is 1.03. Total risk to reward in that period was 41.11R. Now, speaking hypothetically, because I'm never giving financial advice and what you do is completely up to you, but if I, which I do, for example, follow these calls with, say, $100, that could have returned me 40 times. Like if I was following with $100 and I was risking 5%, which would still be very, very risky. All right, you would have made $200 just on that 5% risk. If you had $1,000 and you were risking, so on and so forth. But ultimately, if your risk is $1,000, then you could have made 41,000 with that, right, again, not up to you, we're not encouraging you to do it, but you do have access to all of those trades. In terms of looking at the distribution, long to short distribution, as we can see, we're in a heavily uptrending market in bullish situations, so it makes sense that 80% of the exposure was to long trades. In terms of the trade type and distribution, we can see that we had 57% allocation to swings, again, good environment to swing in. Scalp trades were 18%, they're lower kind of intraday trades, but still on a high enough time frame, sometimes the hourly on a 15-minute, and live trading, which is my baby over there, the part that I take care of, which is also Resume joins me in that, but that's where we do live day trading with members Tuesday to Thursday afternoon, where you can come and sit down with me. I show you exactly how I trade, the trades I'm taking in real time, how I'm managing them, etc. And if we look on here as well, always good to have a little bit of exposure across crypto and legacy markets. So this is really cool, and these are, you know, you can see these in cumulative profit percentage. You can see this in cumulative risk to reward, which we can see was a fantastic month. Plateaued along here a little bit, but you know, this is the whole point. That just you keep going, you keep going, you keep going, and this pays dividends when you're trading these systems. And then you can see the calls table here. You can go in, find all the data, view the call. What was the setup like? Track it, find it on our Discord, etc. Fartcoin in there. So my dear friend Matt Crow will be absolutely delighted with that. So now as we go on to May, we can see we've had oh no, May table, sorry, it's not been updated yet, has it? So my bad. But this is all going to be running through in real live time for you all. So hopefully you all come to enjoy that. If you have got any questions about that, do please reach out and let me know. And obviously, if you do want to come and be a member, it's not just about the calls here as well. You know, our mission statement is to equip everybody with the education and resources needed to pursue your own financial freedom. I came from a non-finance background. So did, I think, everybody in the team. You know, so we're people that just, we worked incredibly hard, right? There's no doubt about that. You need to really work hard, but there's a lot of you out there that are willing to do it. So, you know, whether it's us, whether it's somebody else, find a really good community of proven, tested traders that do this professionally and go and learn from them. You know, even if it's the case of, you know, make the most of making some money with the calls. If you choose to do that whilst you get your education in shape, you know, you don't want to just be tied to bull markets, right? You want to be able to trade, you know, through them or invest through them potentially. If one or two boats join, is there an option, a discount trial or anything like that? Horace, my friend, you just, there's so much free alpha on the website as well, right? So please do feel free to pop on that. I do appreciate that this, you know, financially is beyond some people. We do make it as cheap as we can. We do some promotions. We just did a 30% off for April as well. There will be more coming up as well, guys, but please don't let that hinder you. Always feel free to reach out to me. I can direct you to free resources. All of my live shows, for example, I do tons and tons of educational stuff, are all available on the Bird Nest YouTube channel. You can just go under the live tab, and even on here, right, you go onto the website, you've got all of these free resources, all the resources hub, the infographics, which is an amazing point, especially if you're starting out, you want to know what divergences are, ascending triangles, flag patterns, all right, volume price analysis rules, bits and pieces like that, obviously all the way through risk management and everything. You can find that in here. This is all completely free. And then through the tools as well, this is a really cool feature, right? We've got live crypto heat maps, so you can just see the grey symbolizing not really a lot going on. Bitcoin's kind of a bit mute, Ethereum's down a bit lower, but there's a real mix across the crypto markets. The other thing you can do is put that across onto the stock heat map and say, okay, what are the stocks telling us? Focusing heavily here on the S&P 500, right? You can obviously move that across onto the NASDAQ as well. And you can see it reflects fairly similar, a cautious, muted start to the week. Tech stocks down relatively heavily. The fact that NVIDIA is down as well, you know, part of the Magnificent Seven, and, you know, some of them are up, but marginally is probably what's dragging down the indexes a little bit, which is, you know, to be expected. They've been propping them up for quite a long time as well. And there's other things on there as well, you know, crypto screener, you can look at the economic calendar and bits and pieces like that too. But don't hesitate to reach out, and we'll obviously make sure you are directed to all the free education we provide as well. All right, everyone. Well, look, thank you very much for your time today. Really do appreciate every one of you. 3,500 people live with us today, an hour and 20 minutes into the show. I do always run over on these things, so apologies if it's been a bit long for you. But if you do have any questions, please do reach out. Please do give the show a like, and please do give me and the Bird Nest a follow on Twitter if you enjoy the content. And if you'd like to see more of it or anything different, please do let me know. Wishing you all a fantastic week ahead. Stay sharp, and I'll see you all around the nest.